The end of 2023 is almost here, and that means it's time for Wall Street to get out the crystal ball. Bank of America are claiming plus 10, BMO are claiming plus 12, but really, should we be listening to any of these forecasts? Traditionally, they've got it pretty wrong, and that coupled with a perfect scenario being priced in now by the fear gauge or the VIX has some traders and investors worried. And so it should. A 4-year low on the VIX has us worrying about everything that's going on. Today, we talk about the melt up that continues and whether that's statistically likely into the month of December, the dark pool transactions that are going on right now in the markets, and of course, the difference between the volatility and the VIX volatility. Why is it that we're actually seeing a spike up in this particular market? The cues, whether there's a head and shoulders here, I've seen your comments, and of course, what's going on with the US dollar. The biggest hedge in the world just made a new low, but is it still at a buying pressure point? Let's talk about markets around the world, including stocks, commodities, and cryptos right now. Well, welcome back, everybody, to The Daily Show, where we discuss markets at the close of every single day. Make sure to subscribe if you like anything to do with markets. We'll be talking macro, lead indicators, and of course, the hottest charts. First up, let's talk fear and greed. We've seen VIX crush recently, and a lot of people are starting to talk about it. Does it instantaneously mean that markets are going to fall off? The answer is quite simply no, but we do need to be aware of it, and then we want to be looking at our triggers, our price action style levels that we'll be watching today in the show. Greed is hitting. Extreme greed is not quite here yet, but we will be updating you if that comes. And speaking of updates, in less than 24 hours, our newsletter is going out talking about VIX crush. So if you're interested, sign up for the VIP free weekly newsletter. Links in the description down below. All right, let's talk about December, because we're coming into a month that traditionally is bullish. In pre-election years since 1950, we've seen 72.2% of the time Decembers give us a positive run. Now, of course, that's an interesting stat by itself, but it's not enough to go off. You can see here some Decembers actually are quite bad. In fact, there are some real doozies over the last kind of 20 years where we've seen really bad returns during December. But does that mark what we expect based on the current cycle this year? Well, of course, people are all looking for a pullback. So what tends to happen in the last 28 rolling days of the year, where January to November is very strong? We've seen over 10% gains. The funny thing about it is we often start a little bit bullish into the beginning of the month, but then things start to roll off into the middle. This is the stat that tends to happen. And of course, if we're going to expect a pullback, it generally happens somewhere around that 6th or 7th of December into around the 15th. Will it occur again in 2023? Well, let's look at some of the things that do tend to happen. First up, of course, we've got the Russell 2000, the small caps. Everyone wants to talk small caps. I like small caps as well at the moment, but I kind of like mid caps a little bit more, and we'll talk about that later on today's show. But you can see here that you've got this recovery. At this point right now, we're sitting about here in terms of the Russell 2000. Now, it tends to do very well from the middle of December all the way through into January and February. Will that again happen for the Russell? It's something that we're looking for, and of course, many of you out there are probably checking this particular stat out. Another thing that doesn't really allow the markets to come down right now has to be us, the retail traders. Now, we're all saying it's bullish, but then you look at the leveraged contracts and you say, well, wait a second, these leveraged contracts are ridiculously bearish. Everybody's trying to short most markets. The SPY is 65% bearish positions. The Dow has moved to an 81% bearish position from retail traders. And of course, the DAX, hitting into a key resistance, has just moved into 81% bearish markets. Now, I will tell you that gold sitting at 56% bullish, 44% bearish is actually really bearish. Usually gold sits around 70% bullish. So you can kind of see why gold continues to move higher. And it's one of our favorite metals on this channel that we've been talking about now for it feels like ages, but it's probably been about a month and a half. An incredible run and a great breakout. Certainly one of the standouts over the last couple of weeks. Let's talk about VIX crush. Of course, the VIX has been absolutely decimated in 2023. And a lot of you are probably going to be saying, yeah, but I don't look at the VIX anymore. Fair enough. Since zero DTEs, we haven't seen the same reliance on the VIX. And it could be the VIX is dead in terms of us using it as an indicator. But what I think is going to be interesting is the volatility of the VIX, so the VVIX versus the VIX. We're seeing a spot little bit of increase. And in our newsletter, we'll be talking about the move as well, which is, of course, what are the bonds traders thinking about this market right now? As we mentioned, sentiment is super bullish at this stage in terms of the reports. But of course, the reality of what people are doing seems to be people are trying to go negative on the real contracts. So we are at a super low bearish point. This means that even if you're a bull in the markets right now, you need to be ultra cautious. 23.6% bear reading is very low, and that's coming off only at the start of November being 50% of people thinking that the markets were bearish. That's a huge switch and one that we haven't seen in quite a while. Another one is high yield CDs. Now, if you've been following the markets in 2023, you would know that credit default swaps are very, very important. And of course, at the moment, credit spreads are contained. But look at this. When we've come down to a similar reading such as this, we've generally seen peakings in the market. Now, that's not to say that the market has peaked here, but if we continue to see these credit default swaps go underneath this line, then that's going to be actually another bullish catalyst for the equal weighted S&P 500. And of course, that's what we're really looking for right now. You're not wrong to say, and we'll look at this later in today's show, that the Mag 7 cannot, that's a Magnificent 7, cannot actually outperform the market by so much without us seeing mid caps and small caps start to improve. That's not a healthy market, is it? That's kind of disgusting. I'm not going to talk about this chart too much, but it was just an interesting one that I found on the internet. And it shows you here American households are supposedly in a much better position financially in terms of assets over the years. Take a look at that. Very interesting. And of course, contrary to what we all probably believe. I was in America recently, and I can tell you that I was surprised people could even afford some of the things when I was having a look at the prices, and I was just thinking about it was wild. But then again, I was in the major cities, so I'm sure it's much more expensive there. S&P 500 versus the 14-week RSI. RSI rises above the 60 from below the 40 within 5 weeks. What do we tend to see from this percentage point wise? Well, actually, we do tend to see these weird melt-ups, but what you'll notice is we get a lot of melt-ups here, and then we do actually have pullbacks. There are some that aren't. Of course, this one. Over here, we get the pullback. Over here, it goes absolutely ballistic. But yeah, we tend to see like a little bit more of a melt-up, followed by kind of like a drastic sell. And that's the thing that I think is interesting about this stat, the drastic sell. Could that be by the rumor, which is that the rumor that the Fed actually does an interest rate cut, sell the fact? This is a chart I've put in almost every single video since we first found it a while ago, November 10th, I think it was, or even before that. And it basically was talking about those first 7, 8, 9 days. When you get these huge rallies with no pullbacks, what tends to happen? And the answer is quite simply melt up, which is a slow grind into the future where everybody loses faith in ever being bearish again. So far, so good for that. And of course, it's why we've been following the price action and not really going super bearish or anything like that. It is still bullish until proven otherwise on these markets. Even if you are feeling bearish, it's just very tough to go against them when you don't have any price action to go off. You're just kind of making a prediction. And as we like to do, we like to react and not predict. It's a bit of a blurry chart, this one, but just again, a very similar stat here. And what it's showing us that the consensus of 12-month price targets of strategists on the street is historically bullish for the SPX. And this is basically going to show us that the S&P is actually above the consensus. Now, what that tends to mean is that actually we're going to see upgrades across the board as strategists and forecasters and stuff start to bring in the big guns in terms of their bullish statistics, and therefore they might bring some, I guess you would say, managed money and all sorts of things like that. Now, we're already starting to see it. Remember, Bank of America have just made a big switch in their 12-month targets. Why I had today's video, BMO have just put a 12% on, and Goldman Sachs, of course, have been negative, but now they're probably going to turn bullish again, and we'll have a lot of those updates coming through over the next month. So make sure to subscribe for that. It's going to be interesting. This is kind of where 2024 gets interesting. We know that when we have basically a Fed pivot, which is what everyone's trading off right now, that historically we go into a hard landing. Now, of course, there are some soft landing candidates that we could be looking at, but even in soft landing candidates, you'd be surprised how much markets pull back. Pause this screen if you're interested because there's some really cool charting here and it shows you everything to do with what happens in the market conditions. Here are the stats, though, that I shared over on our X account, FX Evolution, links in the description down below, which shows you here that of the last 14 times this has happened, I think it's 11 of them have ended in recession. And of course, most of them have actually pulled back quite a considerable amount. And we've shared that chart over on our X account. So make sure to go check that out. Another thing that's helping markets come up right now is loosening of financial conditions. Central banks around the world have actually been doing rate cuts. We've shared this chart before. I'll show you it again. And if that continues, the higher and the more cuts that happen, of course, the market's going to lap that up and love it. This chart here doesn't seem to be working just yet, which is the VIX-spiration. Obviously, we have seen some melt-ups before pullbacks, but it was just a +6, I think, in terms of markets have generally been falling off on this one. I'm not going to leave it. I just want to show you it so you can see the bull and the bear positions. Now, this is where we really started hammering gold and obviously went on about it and really liked it quite a lot. Gold tends to be doing exactly what we expect at this stage. It's hammering up and it's squeezing those shorts out pretty heavily. And it's been very bullish with pullbacks actually almost to the perfect technicals. This chart was first kind of shared back in October. And since then, it's been a really great time. And I see a lot of people going super negative on gold. Well, at this stage, I mean, it still looks pretty good on the charts even now. Let's talk about dark pool transactions, a big one coming in on semiconductors. And we'll look at the Mag 7 soon, even though that's not semis. But what we're seeing is the markets show weakness in all of the really hot stocks at the moment. So the semiconductors showing a big transaction to the downside. The USO, the United States Oil Fund, showing some buyers coming back in after what was a pretty big sell-off. And then the Russell 2000 showing a large, big transaction that was actually from Friday. And then that's come through on the Monday session. So somebody's buying or selling a huge position in the Russell coming through there. We've also seen some bets across VIX at the moment. So there are a few people going for VIX trades. I'm not one to trade the VIX. It just brutalizes you when it comes to everything that's going on. And you can often see that you do tend to get some large trades come in when VIX goes this low. We've seen that before with the large trades over here. It took a little while, but then we did see the volatility come in on the markets. And of course, in this case, it's a short VIX, the biggest trade that we've seen in many years. Let's move over to rotation. I'm not going to do options for the Monday session. It was a bit slow. But let's move over here to gold being the number one stellar. Also metals. I'm pretty happy with both of those being out in the front. We've talked about them quite a lot on the channel, so obviously good. Conservative stocks, so basically ones that are defensive. We didn't really see those kind of defensive stock positions outperform massively. Healthcare, staples, utilities, I would say that's not a plus for them, but we did see anything to do with kind of risk taking, which is biotech, solar, clean energy. They were down on the session. That takes a 5-day rolling average as gold is the best performer, followed by things like metals, and still the defensives are in those top sectors. So I guess you could say the market is rotating. The market's getting rid of tech at the moment, or it looks like it is, and it could be rotating into these other sectors. So let's take a look at whether we continue the melt up. This is our first reading here, effective yield rate. We're seeing effective yield rate drop, which is a positive for the market. So of course, that is a bull case at this stage. Even if you're feeling bearish, unfortunately, it's bullish. RSP is improving. That's the equal weighted market. And you could argue this has a considerable breakout on it recently, which of course we have spoken about quite a few times, kind of showing you that there could be some mid caps coming through and small caps. Now, this is the percentage of stocks above the 20 that's hit into those real highs here. And you can go back and have a look at some of the other dates to see when we've hit those highs. And what I would do is maybe put this on your chart and then you can overlay it with the S&P. We'll do it in the next video, but it's something we need to discuss. And of course, we will talk about. Now, I want to go back over here to the beginning of the charts and just talk about volatility crush for a second. So the VIX is super low. It's like 12 or something. Now, I've had an alert on just above 12 for a little while, and it's 12.68 at the time of this recording. The VIX is really, really low. Now, the volatility of the VIX is increasing. So that's showing you a little bit of a difference here. We're seeing basically an uptick in volatility, which we've seen before over here on the left-hand side, where the VIX did come with it, but volatility didn't pull back as much. It didn't make a new lower low, see? And that's what happened with the VIX. And then we saw a spike up. So sometimes the volatility of the VIX shows you something that's underneath, and not many people talk about this. So certainly something good to see on the charts. The difference between these two, we'll have it in our newsletter. It'll be one of the key points of discussion. Of course, that is totally free if you want to check out the links in the description down below. So let's talk about US 10Y, what's going on here. So US 10Y went down, and we all know that if yields are going down, the market's loving it, at least temporarily. Now, we also know that it technically means something sick is happening in the economy. I mean, yields don't just drop because it's all glorious. This is actually a long-term, probably a problem, and I encourage you to have something like a US 2-year versus 10-year on your charts so that you can see the difference when it uninverts. We've talked about that a lot. We've got an alert just underneath a new low. If that happens, we might have to consider further melt-ups in the market across the board. And of course, this was a big benefit for treasuries, which we've been talking about potentially having a bottom-off effect recently with some nice big volumes coming through. And obviously the volume, you can see here that we're almost going to make a new high as treasuries push off. And that's, of course, contrary to what a lot of people believe, because we saw funds actually dumping their positions, going negative on treasuries for the first time, and then suddenly it bottoms. Remember, not all funds make money, guys. So it's funny when sometimes you see all of them doing something, it goes and does the opposite. That's got to be, it's got to be Jamie Dimon, yeah? It's got to be the smartest players in the room having a go at it. All right, let's move over here to PCC. And we know that put-call ratio is in the middle, so it's kind of neutral, no real edge there. They've got the transportation average, still no breakout to the up high, still no breakout down low, so obviously that's neutral. And we've got home builders as neutral could be. Check out that coil, though. This is becoming a coil now. So we have to expect the breakout to be relatively significant. I'm actually excited for this one. You can see I've straddled the alerts on here, something that we could be doing just to see whether we're going to continue to get rally up. Now, you might say, well, that's unbelievable and ridiculous and crazy, and I don't like the market and it's rigged and stuff. Look, it's stealing people's short positions. You can see the short positions. It's ridiculous how many people are short on these markets, even though we're all claiming that it's bullish. And unfortunately, that's because look at this S&P chart. It's like a vertical ridiculousness. Now, we are in the zone of danger, don't get me wrong, but then you go and look at our squiggly lines here, which is, of course, our central bankers. Now, these central bankers have been loosening up. Check this out. The Fed, the green line here, almost a new high in terms of liquidity. There's got to be something broken in the system. Hey, they wouldn't do this otherwise. But anyway, that's what's happening underneath. We move over to copper, and we can see that copper's had a little bit of a weakness here. It's just consolidating, no necessary breakouts there. And then we move to the US dollar, what's often considered the hedge of the markets. And you can see here that the yields coming down is pushing US dollars down again. Now, it's still in that demand zone. It's made a new low. This will be an interesting point. This is where buyers are going to come back in for the dollar. It's about the right area for it to do so. And I've said a few times that I kind of expect, if you're a bear in the markets, that you want to see the US dollar bounce this area pretty hard. We haven't seen that yet. So we haven't really seen anybody come in and find super bid on this. We'll be watching and, of course, updating you there. Now to gold. Nice rally. 2015, looking really good. I mean, obviously, it's looking like it wants to go for that 2025 to 2050 kind of line. And we've talked about this a few times, how this is a key level. If we get through these wick points up here, could gold hit an all-time high? Most people hate the metal at the moment. I'm not sure. Well, I can understand why. It's usually a terrible performer, but it is absolutely doing some great technical stuff. I'm sure it's got a lot of shorts on it, which is partially the squeeze capability here. And you can see that this is a massive blockade for it. So it had that pullback. It's pushing up. I'd like to see gold continue its strength, but that's going to probably also require the US dollar to fall off. Now we move over to oil. I'm probably confused by this chart. I mean, you go over to a weekly there, and you can see it's kind of long leg dojied in the middle. It's between our most traded zone 2 and 1. We've had those on the charts for ages, and we've seen the market just kind of trade between them. I would say oil is a hard pick here. Of course, if you were going to go with the stats, you would say down because the trend is still down. But we have seen USO getting some trades in it. So maybe it's the stocks that are better than the oil spot at this stage. Tesla, really trapped zone, basically just a channeling market between the lows of 231, 232 and the highs of 245. We basically just have sells and buys coming through. Again, it's a coil, so expect a breakout to be relatively significant. We'll set alerts, we'll update when we get those things. Now, if a sell-off does happen, the reaction here at 222 is going to be super key. But I want to get on to the next chart, which is, of course, a mixture of all of the stocks, all the big Mag 7. Now, have a look at this. This thing actually hasn't done much since November the 14th. So really, it just had that monstrous rally off the back of October. I mean, it was just huge. Look at this thing. Let me just mark that out for a second. Let's just take near the low. We've got a 16% rise in the Mag 7. So quick, then settles. Again, a coil. So if markets break to the downside, we have to expect that's probably a big seller coming in. Could this be part of some kind of Wyckoff distribution? It's something that we'll break down in the next video, so make sure to stay around for that. But there are some price action signs here. And of course, we have that gap up as well. So some interesting stuff going on in this market. And this is a culmination of the Mag 7. Let's move over to the CQQQ. That's the Chinese market. Still low. I see everyone talking BABA. Yeah, I don't really care about BABA, but you do see here the CQQQ has broken out and it's showing some signs of bottoming effect, which is good. The German DAX, this was a heavily shorted market, obviously putting the squeeze on. Now we're at these highs. So people want to know, what do you think about the DAX here? It's an obvious level to see the short. I mean, anyone could see this. But have we seen the full rejection yet? We have had a little bit of a change of trend. We still have a lot of structure around that 15,920. Scalpers are going to be trying to short that 16K if it does pull back up to that zone, because a scalper is going to say, well, that's where I think it's weak. This is where I think buyers sit. But really, a swing trader is not going to be convinced by much until it gets underneath that level there, which is around 15,840. So yeah, not too much. Key level could certainly keep melting up though, even though everything's overbought under the sun. US 2000's kind of similar. The Russell, although we've been talking about this being weak from 1800, and it has fallen off a few times, it hasn't broken out of either of the high end or the bottom end range. And what it's doing is consolidating, or as we've said many times today, coiling. So almost all of these things are coiling up, and we can see that there with the Russell. The Qs, a lot of people calling this as some kind of head and shoulders. I mean, I'm going to show you what I feel like. It's almost desperation on this one. Here's the head and shoulders that everyone's mentioning. So you got your left shoulder here, you've got your head here, and you've got your right shoulder here. And then people are drawing like trend line, I'm sure, through there. Now, I haven't seen the official whatever's on X or wherever people are drawing this, but I think the problem's going to be is that you really do need to probably break below these alerts. So levels are 15,855 or 15,730 for a swing trader. And at this stage, it's just melting up. It's still making a series of higher highs and higher lows. Now, this is a lower high, so don't get me wrong. It's a lower high. It's possible that we start to see weakness here. It is at those highs. It's at that key level, but it's still melt up territory until proven otherwise. You can see here the doji, and that shows us that we're at kind of like a fair zone for it at the moment. And there's a lot of, there's a lot of cases to be made for that type of thing to really be still a possibility. I still have this massive high over here as a very real potential of where the Nasdaq could get to before it sells off. What about the US 500? It's the same thing. The S&P has been putting in, some pretty big work. It broke out of that other range. It's in that critical level. I think we've got some kind of gap fill that sits around that 4586-ish zone. And at this stage, it's still melting up with a series of higher highs and higher lows. There's nothing much you can do about it. It is what it is. Fighting the system is going to need an option because you just keep getting your stop losses hit. And remember, the stat is that when you see those +7, +8, +9 days, we actually see 60 days on average of melt up. And that might be frustrating, but that's what we've seen in the past. So for now, price action remains bullish. We've got the key levels here that we've set for swing and for day trading kind of stuff in terms of where there could be some potential weakness. And of course, that's something we're looking at. Now, did Bitcoin do well over Thanksgiving? Not really. Actually, if it doesn't do super well over Thanksgiving, it does tend to have a little sell-off here, followed by that kind of, it actually has like a little bit of a Christmas rally with it that happens around the 15th, actually. So we'll bring that on the chart. I'll get you the seasonals for what tends to happen with Bitcoin. But for now, it's still that melt-up story. It's still a high, low festival. We've broken through 38 and then failed it. Now, that could be opening up, don't get me wrong, a UT distribution. So this could be a distribution cycle for what we're seeing here on BTC. And Ethereum has continued to fail hitting past that 2150, which we have an alert on, 2142, we have an alert. But it's still consolidation, still in the coil, still in these levels. So I think that's important to note. Now, if we go over and we have a look at what's coming up this week, it's not really a huge amount of economic news. Of course, we have OPEC, which is going to affect things on Thursday, November 30th. And let's quickly scroll up here to Tuesday, and you can see that we've got CB consumer confidence, a bunch of central banks from other places around the world. We've got prelim GDP, whatever. Manufacturing PMI could be interesting out of China. Then we've got the OPEC. Then we've got core PCE price index. And then, of course, we go into Fed Chair Powell speaking on Friday, along with the ISM manufacturing PMI, which is relatively important. So all of that is coming your way. The markets have shown that they are pricing in almost perfection in terms of no problems are going to be found. And that's what the VIX and the volatility in general is finding for you. If you're interested in finding out a little bit more about that, then of course subscribe to our free weekly newsletter. And I hope that you had a great long weekend, if you did get a long weekend over in America. Otherwise, we're getting ready for another big week in trading the markets. Subscribe, smash the like button. We'll see you in the next one. Bye for now.